Good evening, Wizards, and welcome to episode 24 of Wizard Wednesdays. Now, first and foremost, a massive apologies for the delay in the Wizard Wednesdays episode this week. We've had a series of dramas and technical issues. I recorded a 35-minute long breakdown for all of you, as you've probably seen on Twitter, only to have the majority of two segments that had to be split up into two misrecorded and turned to black. So there's a bit of analysis to catch up on, but that's no issue. We'll instead have some even fresher analysis with the new price action reflecting this as well. But first and foremost, and more importantly, let's actually look at what we are looking at right now. And if you may not have already seen from social media and across the social media platforms for Wizard, what you are looking at right now is the login page and the first real outlook into the Wizard platform. And what lies behind here is an abundance of features spanning over 100 plus different unique features and functions that you will be utilizing when you actually have access to the platform. This is something that has been in the works since February. It's been 7 months now, and the team have been working tirelessly to get this out for all of you. So I just wanted to show you this page first because I'm very excited to show you what's lying behind the scenes. Unfortunately, you will not be getting a full platform review today, but you will be seeing one of the smaller features we've integrated, which is the TradingView integration. And that is a very simple TradingView integration. It's currently in its beta phase, but from now on, I will ensure every single Wizard Wednesdays is recorded via the CryptoWZRD platform. Alongside that, I'm going to be showing you some exciting features on the TradingView page alone, which has been something you guys have requested. But for now, let's actually log in and see what lies behind. A bit more of a closer look to what I showed you on Twitter. So what you're looking at right now is the TradingView segment of the CryptoWZRD platform, where we have managed to integrate this software for you to very easily and very conveniently analyze all of the favorite pairs that I cover right from your portal and your platform. I'll go through the overall setup of this platform first and show you some of the basic features which are currently integrated, and then I'm going to move on to showing you exactly what will be following once you actually launch. So right now, it's in its very basic stages. We just have the very simple features, and as you can see, everything is stock. I currently cannot change the candlestick colors. However, once you guys are actually using this platform, it will be just like using TradingView on the actual TradingView tab or website. The only difference is, and one of the key features to first mention, is the BTC, XRP, Ether, and LTC tabs. Now, all this does is very quickly switch you over to the Ether, LTC, and Litecoin charts. And the reason being is, these are the main four I normally cover when it comes to analysis. And although the majority is always going to be BTC and XRP, for this episode in particular, I will most definitely be recording and giving some Ether and LTC analysis as well. So we'll go over a little rebrief as well of what happened in the prior segment that I recorded. And fortunately, not much has changed since then. So we're still well on track. All I've done is set the key levels for BTC, but the XRP, Ether, and LTC charts have been left scratch. So we'll be not only restructuring those charts from scratch as well, so we can all be in synchronization. We can also get some fresh analysis on those as well. But also, what I wanted to mention is, you may have noticed the watch list is already embedded. This is something I preempted in advance, and every single crypto that I've either covered before or that you guys have shown a particular interest in, I've decided to put in a predetermined watch list here. So anything from USDT to Nano to OMG to Dogecoin, even though I do not cover these myself necessarily, you guys have requested them, so it's all here on the platform. Now remember, this platform isn't for myself. It's not for me to have some fun. It's for you guys. Every single thing we have done for months on end now, every single thing, we've requested you to have the opinion and say. So this platform has been made for yourselves, and we're striving every single day to do anything we can to integrate what you guys have requested. And this is just one of the most convenient things we could do so far. Not to mention, when it comes to TradingView, when you have loads of tabs open on your browser, guys, let's be honest, it slows down the computer or the laptop or desktop, whatever it may be. So what a more convenient way to have the main four to easily compare, check the correlations, whether that's inverse or whatever it may be. You can very easily do so without slowing down your computer. So that's one of the first things I wanted to show you. And for now, let's just go over to CoinMarketCap first. So CoinMarketCap, since I actually last recorded this, the Btc Dominance is still at 69%, which is very good to see, because the main focus from now on will have to be BTC again. Now we've seen this drastic increase in the Btc Dominance. Looking at where this was, and the last time we saw the 69% mark was all the way over here, April 2017. So anywhere from April to May or March was when you started seeing this figure then drastically decline all the way down to a low of 35%. And I'm looking forward to that day massively, because that's when we will see one of the next potential flippenings. So for the time being, looking at the steady growth of BTC Dominance, as I just stated, BTC is going to be our main focus once again. And I'll be showing you how the analysis lines up so flawlessly with the likes of Ether, LTC, XRP as well. So let's go over to this. We now see the BTC Dominance is looking pretty solid. We can also see that both Ether and Bitcoin are down around 6% today, whereas XRP is down a whopping 3.5%. Joking, it's not whopping, but it is down a fairly significant amount as well regardless. And overall, the BTC Dominance is showing us that the overall downfall of Bitcoin is dragging the market with it. And even Tether, that's a pretty drastic drop for Tether as well. And yet again, another example of why I'm not a big fan of using alleged so-called stable coins. So going back over to the platform, let's look at BTC on the weekly and have a little overview of what we've been covering before, how the analysis played out to perfection, and what could actually be going on behind the scenes. And actually, before we do the weekly, let's go to the monthly, because this is the first thing. Let's get rid of these volumes. I'm not a fan of volumes, and I also do not want these random moving averages either. So the first thing to mention on Bitcoin is this monthly chart, which many of us forget to actually look at. But what you would actually see on the monthly chart is a very big key region of what's actually been going on behind the scenes. So the first thing to do here is the Fibonacci chart. Let's just get this set up, get this all fresh, and get this back to what it actually should have been in the first place. So the first thing I'll do very quickly, let me just get these up and get up all my key levels, as I have added a few and I wanted to make this a bit easier for all of you anyway. So bear with me a second and I'll get these exact levels up, because even I forget sometimes what exact levels I have. So there we go, we have this. We'll get rid of these very quickly, very unnecessary. And again, just showing you when it comes to Forex, these are very crucial regions to have for many people, because there are so many retracement levels to have. But due to the volatile nature of the cryptocurrency market, I prefer to fine tune and optimize the Fibonacci retracements purely towards the 61.8 and the 78.6% retracement. All of this mess here can go straight away. The background can most definitely go, and so can the trend line. The first thing I want to mention on this overall movement as well is, by the way, if you have not set up your Fibonacci levels, many of you have been asking me to do so, here is your chance to mimic exactly what my own Fibonacci levels look like. So going over to this, the first thing we need to do is add the minus 0.27, which is of course our target extension, and we'll make this orange for the sake of this video. Then we have the minus 0.618, which is of course the inverse of the actual 61.8% retracement. So making that orange very quickly as well. Excuse me, you can actually see a very interesting correlation here. And first of all, the 61.8% retracement we saw 2 months ago in the month of June. This is how I actually managed to preempt the $14,000 reversal. And what we're going to start analyzing now is exactly what the bigger picture is actually explaining. We're so used to watching this on the 1 hour chart 24/7 and just looking at what's going on, we often forget what could actually be going on behind the scenes. So in saying that, let's go back to the monthly and break down what happened during this procedure. So when we first reversed from the 61.8% retracement, you will very quickly notice we dropped all the way down to precisely around $10,850. Now, this was a key sign, first of all, that there was a drastic weakness in the market around this crucial level here. So before we get into actually understanding this, we will look at what happened the following month, and why I'm actually looking at what could be a very potential market shift to the downside. When we saw the second month an attempt to break higher after the candle opened at this exact same price of around $10,850, you can see we attempted to tackle this 14,000 region dollar again, only to fall around $1,000 short, showing there was much more selling pressure than actually anticipated. When the monthly candle closed after attempting to break lower, we can see a perfect closure around the $10,000 region. Seeing this huge red monthly candle closure was a big warning sign to me that we could be in store for something potentially drastic and further movement to the downside. Following on from the current month and the current price action we're seeing right now, you can see yet again the key level we have marked around $12,000 to $12,500, even $12,350 if you want to be absolutely precise. You can see a trend line actually sloping down of the monthly candle wicks. You can see the wicks slowly progressing lower, which tells me, if I was to use this on a visual perspective, let's just imagine this range here is where the institutional sell orders are, from the 61.8% Fibonacci up to the $14,000 psychological resistance level. When price actually reversed from this region, it was bound to come back and try and attempt to break this region lower. However, what happened was, when we failed to break lower, all this means the selling pressure and the institutional buy orders are drastically increasing. Seeing a drastic movement in the wick size as well, and seeing how the wick closed lower and couldn't breach higher, shows us the selling pressure is becoming immense, and it just means more orders are stacking up. When you consider this now dragging all the way down to there and tapping this level, all this tells me is the selling pressure is just being pushed down. So if I was to use this as a plate, let's just say this is where the orders were. The orders are slowly pushing the bulls down and weakening the momentum. The bulls are failing to break above this region, which is a very big crucial sign for me right now that we may be in store for something quite drastic. So if I was to get rid of this and actually look at this right now, we have to actually wait for this monthly candle closure to really decipher what could be happening next. Because although these wicks are ascending, these wicks are descending. So there's a bit of a confusing correlation. Now, looking at the Fibonacci extensions on the monthly perspective, we're obviously not going to be fulfilling these. We will not be going into the minus at any time soon, or any time ever for that matter. But it's an interesting thing to note. The 61.8 was a very perfect movement. I believe if we do drag this down, it still actually counts very valid. If you drag this from body to wick or body to body, you can see there's a $337 extension. This is still something to be completely disregarded by all means necessary, but these Fibonacci levels have been holding up miraculously well. So it goes without saying, we do have to pay attention to this Fibonacci setup. Going over to the weekly, you can see right now a very, very interesting scenario in the market right now. And if I was to actually start getting up the Fibonacci's for these specific regions, you're going to be surprised at what you start seeing. So first thing, from the A, the B, the C extension, again, right in between, dead in centralized, from the 78.6 to the 61.8. We've tapped that level, we've rejected the A, B, C, and the D extensions are starting to line up quite interestingly. And as you can see, if I extend this all the way out, approximately what we're looking at here is around $7,800 on the extension and $6,200 on the other extension. Now, why is this actually quite important, and why does this make perfect sense? Now, if you recall, several weeks and even months ago, there was this specific $6,000 region I left open in my mind for a very long time. The reason being was the inverse head and shoulders here was almost too dangerous to ignore. And looking at what we can see right now with the actual validity of this Fibonacci extension with this key level of support here, the shoulders, the head, and the potential shoulders could be formulating around this region. More importantly, if you actually recall many weeks ago yet again, and if you go through many different and prior Wizard Wednesdays, you would have noticed I said I expect the early stages Q1 to Q2 of 2020 to be when the next bull run occurs, mostly due to the BTC halving. When you look at what's occurring right now, and when you look at how this market's actually unfolding, especially with the overall monthly Fibonacci levels, we could be identifying this very large possibility. There are too many confluences here to ignore, and with such a huge rejection, yet again, 2 attempted breaks of the $11,600 region completely failed. Wicks are going through, plenty of wick fishing occurring, but the body closures are showing a very different story. And we have a very large candle in formation right now. It's only Wednesday, so we have many days left of the week again. And if you look at how many large red candles like this have formed before at crucial levels of resistance, this could be painting a much bigger picture of another candle to follow. More importantly, on a weekly perspective, we've broken through support, as you can see, yet again, we've pulled back up, we've gone to retest this level of support turned resistance, and we've now slammed down to our next key level. So not only is this showing a very clear sign of potential weakness in the market, especially after catching that upside movement, we're also looking at how strong these key levels are, and why I stress day in and day out why you should be mirroring my BTC levels importance, and more importantly, why these should be your main focus. Because at the end of the day, if BTC is currently rising in dominance as well, the more we focus on BTC, the more easily we can actually anticipate what the other pairs will be doing. So this is a current scenario for me. I do believe there is another upside leg available in this market. I'm going to show you exactly why now. So we have this current Fibonacci in play. We are unfolding. We are literally doing a Fibonacci inception. We are going from fib to fib to fib. And what you can see right now, this is where things get very, very interesting. The A, the B, potential C legs up here and the D extensions of the Fibonacci's line up with the overall longer term picture, and then the short term still lines up almost identically. And as you can see, these two extensions align up perfectly. So for a very short term downside target, this is looking incredibly promising right now to actually see unfold as a reality. So all I'll do is get rid of these fibs for now and mark up this level here as a pretty important level. Keeping the analysis clean and simple, I will just change the color of this just to signify what we are looking at as potential downside targets. But we are not shorting just yet. We need to actually look at what could potentially be occurring before any potential downside movement unfolds. And that would be by, first of all, let's get rid of this. And actually, no, before we get rid of this, let's look at these extensions as well. So not only do the extensions line up, let's look at the retracements themselves. We can see around 11,300 up to 11,800, where the $12,000 region lies as well. So we have a perfect correlation with our upper resistance level, and then we have the correlations with the Fibonacci's as well. So all kinds of madness is occurring around these zones. So in saying that, if I was just to quickly mark this up and leave that there, we can start identifying where price could be heading in the foreseeable short term before actually gearing up for a final leg lower. And if you actually look at this right now, the lower highs that have been forming from this movement as well, unless we actually start breaking out of this level for the time being, it's looking pretty solid for a downside movement. So if you look at that trend line, let's thicken this up a little bit and keep that color for now. We don't need to abide by the colors. You can see the third trend line tested, break through, a little fake out, but then inevitably we absolutely died to the downside. So this trend line can be taken into consideration. And if you look at this now from a daily perspective, after finding that perfect reversal from the $9,500 region, this is something I wanted to stress. The calls have been so precise right now. There wouldn't have been a single bit of drawdown from this call, and you would have made over $1,500 in BTC movement, which means 1,500 pips off a single trade in literally a matter of a few days. Looking at how this market melted, I've seen a few people, what happens now. The beauty is, guys, if I drop down to the 4 hour, I did state the first take profit region would be $10,800. And Lord behold, although we did fail to breach that little bit higher to 11,200 to 11,300, what you are looking at here is a perfect profit taking zone. Alongside that, I said to comfortably place your stop losses just below the prior wicks, etc. So if I'm to make this red just to signify what would be a stop loss, when price tapped down here, you would have been closed out. If it was even lower, you still would have been closed out here. The beauty is there would not have been any loss, there wouldn't have been anyone wrecked, because profit would have been taken here. You would have closed out the majority of that move anyway. It would have been a win-win scenario. There's no better feeling than watching your stop loss get hit in profit, and that's something I will always stand to ensure you guys are doing. Looking at this right now though, however, and going back to the daily for 1 second, what is actually going on right now? If we have a little look yet again with the Fibonacci setup, you can see we have a perfect, from the A, the B, the C, a perfect candle closure right now, which obviously will be in a few hours, so we cannot confirm that just yet. But what you can see is a 78.6% retracement, absolutely precisely and to the T. So when we start looking at these upside rejections and extensions, everything is starting to line up and make perfect sense. This is where the prior Fibonacci extension was from this movement. As you can see there, it all lines up in correlation within this same region of around $11,600. So getting rid of this for 1 second, getting rid of this once again, what is currently going on a 4 hour perspective? And as you may recall, I did say XRP as well, before we'll get to that in a minute, I did say the 26 cents region would be our potential reversal zone. And looking at this right now, I do believe this could be coming into play as well. BTC is correlating perfectly with every other pair. So whilst this is unfolding on a 4 hour time frame, you can see, here's why I'm a bit hesitant to enter though, however, if I get the daily up yet again, there's a mimicking trend line on almost every single pair right now. So if we just start looking overall at these levels from there to there or even there, and I drag this over to the 4 hour time frame, you can see from here up to there where it was on the daily, you can see we're currently rejecting this level precisely. However, the reason I am a bit hesitant right now to actually confirm if this could be happening is because the key levels are far more important than the actual candlestick formations themselves. Although we are rejecting this trend line, and although we are looking very bullish with that 4 hour bullish candle, inevitably, guys, we have actually broken back below that $10,000 support, and we are now rejecting that as resistance. As you can see, there is a huge amount of momentum pushing this down. So I am a bit cautious cautious right now on whether this will reverse right now or whether we will be seeing some wick fishing lower, but I would be very cautious of the likes of $9,900 down to $9,800. But here's a more likely scenario. So although we are targeting this upside, and although this is looking phenomenally accurate right now, here's what could be happening, and here's where I would personally be looking for a more refined and optimized entry. The first thing to note is, of course, the trend lines over here. Nice alignment with a little spike down to the 61.8. And worst case scenario, the 78.6 aligns perfectly with this prior region of wick fishing. So in terms of entries, I would personally be waiting for a retest of the trend line at least, or anywhere down to this region where we could try and fish out those wicks. If you want to make life even easier for yourself, here's exactly what you can do. There's a nice trend line forming here with even more confluences to add to this picture. So if you were to catch a simple long opportunity up to the $11,600 region, what a more perfect setup to find than anywhere between this zone all the way up towards this region here, or even the trend line there. You're still looking at around another 1500 pips regardless. So dragging this down, you would need a fairly wide stop loss, but you're looking at a pretty good risk to reward regardless. And of course, if this drops even lower, then by all means you can extend this a little bit here, just below this wick over here where prior price action has occurred, and use this as a means of a final extension of where price could go. So even if you wanted to increase that risk to reward up to 10, you very likely could do so if the 78.6 does come through. So putting this all into perspective right now, I essentially see this being the final drive to the upside to test this trend line and to test that region before we actually gear up and confirm another move higher. I do believe this move is massively overdue, just that final push, and then from there we can actually anticipate if this level breaks, then we can look at a retest and an explosion towards all-time highs. But the more I'm seeing that monthly candle closure and those Fibonacci's abided by, it is quite scary to actually try and attempt to go against the overall long-term market trend. Of course, from this perspective, you can look at this and go, wow, that's amazing. But let's be honest here, it's quite scary to see there is a huge amount of bearish pressure rising. Not to mention as well, if I actually just drag this all the way up here, this broken counter trend has not yet been retested. So even by the time we reach there, whether that could be in a few days or so, whether that's 2 or 3 days, that would then line up with the trend line retest, the trend line up here as well, counter trend retest, overall long-term resistance retest, and we would fall in line with the $11,300 zone, which was our initial target. So for me right now, this is seeming like a pretty perfect setup to come in, retest this region, reanalyze these areas, gather if there's enough momentum, or if the bears still have significant control. We will then be gearing up to start dropping down to that $8,500 region. You would mention, and you will remember, I said that one of the first real downside targets for me, if we were to break lower, wasn't $9,000. We did call this, but it wasn't my final target. And I've still been set on the likes of 8,800 to 8,400 to actually fulfill as a final movement. And if we do see that come through, that should easily drag us down to $6,000, which I believe could be comfortably unfolding before the end of the year. Now, if that's to unfold by the end of the year, then we have the perfect inverse head and shoulder setup as we shift into 2020, which will then blow this thing through the absolute roof. That's when we can start preempting the likes of $20,000, $30,000, $40,000, and even $50,000. But until we potentially see some form of drastic pullback, I do believe we need to see that unfold first. Not to mention 2019, the parabolic run up we've seen, there has been a phenomenal trend line unfolding as well. And what would make pretty good sense if you look at this, if I just fix that and drag this out a little bit, you can see in terms of where this lines up, it lines up with around October, November. So if you were to see that drastic pullback before gearing up higher, this is just aligning so nicely right now to potentially see that happening. So this weakness here has kind of scared me, not to mention head and shoulders as well. There is a lot going on. So let's go over to XRP, clear the volumes and get started on this as well. And more importantly, get rid of those moving averages as good as they are not enough use to us right now. Now, what have I just done? Let's go back to this. And by the way, guys, if you obviously want to, anything you want to add here can be added and will be available once you are actually on the platform and we have gone live. So anything you want to look, whether that's XRP, USDT, or anything, you can easily do this just as you would on any other trading view chart. So the first thing to mention and the first thing to go over is, of course, the actual perfection of the calls that have come through. And to actually celebrate that, I'm going to spice this chart up a little bit and show you something we've actually been working on, and that is the themes integration on the platform itself. This was something that was heavily requested by yourselves. One thing you guys kept telling me was you wanted full customization of the platform that you've not been able to see elsewhere. And to celebrate that, we have started integrating everything you guys have been requesting. And if I go even further, have a look at this. We've got camo, for example. This is one of the first ones ever requested, camouflage. So we've got the camouflage up and running for the sake of this video. And as we start progressing through Wizard Wednesdays, I may be teasing even more of the themes. All of these themes will be available in the Wizard Marketplace, which will be very similar to what you would see in the likes of a PlayStation store. So this is something that's never been done before. I've honestly never seen anything like this in my life, and especially in this industry. So I'm so excited to show you guys, bearing in mind this is one of the smallest features we've integrated. So what is actually lying behind the scenes is much, much larger than this. And if we go over to the Galaxy, we've got the Galaxy theme as well. I absolutely love this one. And if you notice, the color themes are all changing. Now, once you see the full platform and you see it in its entirety, you will notice all of these little changes. So if I go back to the smiley, you can see the colors are changing, the tabs are changing. We are absolutely doing everything we can to suit your needs. We've got the Matrix theme as well. We've got the pop art theme for this example, and we've got the money theme. So I think to first of all start off, let's do something quite nice. We'll go over to the pop art theme, keep this nice and bright, and work with some funky colors. Having a look at this now though, on XRP in particular, let's just have a look at what's actually been going on behind the scenes. And first of all, notify how intimidating this current weekly candle is. I'm not a big fan of this weekly candle right now, and it is suggesting potential downside movement. So it goes without saying, we do need to start prepping some crucial key levels for XRP as well. The first thing to really mention is this level here. I'm not actually going to count that wick as it's not too precise, but this level in particular is a major region of caution for myself. And then going over to here, we'll just increase this on the upside ever so slightly to accommodate for the 30 to 29 cents region. And then all we will do is add one more up above around here, around 35-36 cents, and then we'll add one more to the downside around the 20 cents region. Because if XRP does decide to fall and move in line with BTC, then it's time to start accepting that 20 cents could be another final push lower, and it will be an incredible situation if this does occur, because it's essentially giving everyone a second chance who missed out. Many people view these as negatives in the market, but this could not be a more positive factor. Imagine when price was up here or up here, many people would have absolutely murdered to achieve or have bought BTC or XRP or anything back at these lower end regions. So if this does come through, then we are in for one hell of a treat coming up. Drawing this trend line as well, just to show you why I knew XRP would continue falling as well. Although we have been drastically moving this trend line to accommodate for the ever-changing and dynamic prices, what was once a trend line of this region, when it broke through, we simply adjusted this to the new wick. And what happened here? This broke through. And once that broke through, I accommodated it to the new wick, and I started realizing we were just going to fall more and more. What was the biggest giveaway for me was the pullback and the retest here. So many different confluences, and when it comes to an actual trade setup, on average we are looking at around 5 to 6 confluences at the bare minimum, and there are so many different things that go into that. And if you look at this level right here, this is why I'm a bit concerned right now on what could be happening next with XRP. Although the same price action strategy technically applies and the same layout is happening, as you can see from the 61.8 retracement here, dead on the dot, we have a 61.8. But again, huge open room here, so we do have to be cautious, and it may be wise to actually stack orders with the usual rule of thumb, the wizard rule of thumb of 20 to 30% of your initial position first. And if you do see a pullback, you can then accumulate and add another position from there. But looking at this daily perspective, we're aligning with our original upside bias after falling just short of the 30 cents region. We are looking at a clear break of support and a retest of resistance, but after clearly reversing from this region quite strongly, this should be providing a very similar setup. And if you look at the accuracy of that Fibonacci extension and the accuracy of this upside region here, we could be seeing that final push higher, just like BTC, towards that $11,000 to $12,000 region. But for now, let's just stay focused on 11,300 up to 11,600, and from there we can dictate further. But looking at this right now in this perfect setup, if we're to go back to the weekly as well, you can see on a longer term perspective, if I just do this, let's extend this out over there and then add a fresh Fibonacci from around this region here, which we can refine in a second. Now what you can see here is a perfect confluence yet again. 61.8 is around 30 cents and the upside is around 32 cents. You're seeing a pretty strong correlation yet again with these double Fibonacci inception setups. So putting that into consideration, what's the biggest standout of this movement here that you see? If BTC is to fall down to 6,000, look at what we have in store. Perfectly centralized in between the zone I've just plotted, and then lower on the lower spectrum, 17.5 cents. Whilst this is not looking very possible by any means whatsoever, I will not disregard this because the Fibonacci's are coming through very well right now. So we've had a phenomenal trading week, a lot of profit has been made, but more importantly, I need you guys to also be aware that many things could be going wrong behind the scenes, and it's always good to prepare, because if this happens, we will not panic, we will simply catch a short opportunity. But for the time being, I do believe the upside bias is looking by far the strongest for now. And then let's add some further confluences to this mixture. If this does unfold over a small period, over a matter of days or so, even if this does happen by September, what we're looking at here is a nice trendline retest, perfect correlation with absolutely all of those levels that have come through. So putting that out there right now, as you can see, fell just short, could be tapping higher around this region, gearing up for that perfect Fibonacci setup. And looking at this now, guys, even if you do not include that, there is still an even more precise setup here. The first original target is now aligning perfectly with the 30 cents region and the 61.8. All I'm seeing right now, very simple stuff. Let's get an arrow tool. Let's increase the thickness. Looking at here, and then looking at a very drastic fall down to this region, and this could be unfolding again within that time frame of around September to October. Maybe it happens quicker, because realistically, the quicker this happens, the quicker we can start catching those moves towards the all-time highs and breaking through. Now, shifting over to Ether, a very similar scenario. Let's have a quick bit of chart hygiene and clean this up for a very brief second. Now this is clear, what's the first thing we do yet again? We go over to the weekly and we get those key levels plotted. Now, I will not be doing much on the Ether and LTC scenario as I'm not too in sync with this. However, with BTC and XRP, the general rule of thumb applies. And as you can see, the weekly candle is actually mimicking that of XRP and BTC anyway. So first crucial region is where we're currently resting, around this region here. Taps, taps, and taps galore. So if this does break lower, we need to accommodate for any downside movement. The first thing that comes to mind for me in any downside movement is around $100. And as you can see, we've seen the prior price action there before we broke out, came and tested yet again and yet again. So it's a very valid level and something that needs to be taken with absolute consideration. But more importantly, let's focus on the short term first. So putting this up to around $300, that's a crucial region for me. And more importantly, the general consideration, it moves in around $100 bursts. $100, $200, $300, and of course $400. And look at the precision on those levels. They're coming through magnificently. So it goes without saying, let's swap over to the daily to see what's occurring on this pair as well. And the first thing I see is a trend line on Ether on the daily, all the way at this region here. Now, if we just refine that, that's pretty much a perfect trend line retest. You can see that occurring there as well. The only real alarming sign again is just like BTC, we're actually below the support level now. We've broken through, we've retested as resistance, and we've pulled back lower. But fortunately, with this current price action handling on this trend line, the only thing I would really wait for, although Ether is looking like a very, very good buy opportunity right now, especially with that 61.8 and 78.6 perfection. Wick tapped the 78.6 and the 61.8 is where the candle body is holding. Looking at this upside movement around here, we have a nice region around $212, and on the upper spectrum around 222. So overall and approximately, this is looking like a very nice setup. If I counteract this with the opposing fib, you can see yet again the fibs are almost identical to each other as well. So two crucial regions there, around 214 up to 225. So overall, what we are looking at here is a very similar movement on what could be unfolding. Downside movements, if you look at that, we have around $156 and around $130. Putting these into consideration, I do believe if we did start dropping lower, 156 would provide very valid support for all of us, but I do believe this could extend down to 132. So once the upside movement is complete, this is something we must take into consideration. And from there onwards, I'll just change this as we've done the other ones green. You can understand that what we could be seeing unfolding from here onwards is the upside push. Again, because of the price being a lot higher than the others, this may not be as solid as the others. But if we do see, if I go to the weekly, if we were to see an actual movement like this come through, which would obviously mimic something very similar to BTC, then we can just simply draw a fib from here to there. And understand, if you look at this yet again, the precise resistance zone I've just given you, look at where the 61.8% aligns. It's dead centralized with this level yet again. So any form of ether upside movement, very simply, I wouldn't actually be expecting this. That would be very short term. I would be expecting around $300 coming through before we then gear up. And looking at where these levels align, look at that extension right there, almost precisely where I just gave that zone. So anywhere from $130 to $125 is not too far of a shot to actually achieve. So let's just mark that up right there. Let's get rid of these Fibonacci's and understand with ether, very simply again, we could be looking at this upside movement, bang, wick fish around this region, confirm the validity of this level, failure to break, we are coming straight back down, testing these regions around here before gearing up for our final movement. Now let's just do one final test. From there to there, not too bad, it's holding up pretty well. Drag this down and you land precisely. Not only do you land precisely on these key levels here where we've seen prior price action, as you can see, prior wick movement, you can see the 78.6 aligns up with $131 as well. So these Fibonacci's right now are, in my opinion, painting a very clear picture of what should be unfolding very soon. So going over to LTC to finish off. And again, a bit of chart hygiene, very briefly. Get rid of these moving averages and have a look at what's going on. Now, the first thing I want to mention with LTC is, if you recall, back when we actually started blowing through the roof towards $140, I did advise in the Telegram, and that's something you can go and check alongside a episode of Wizard Wednesdays during this period in time. So anywhere from around June to the end of June, early July, make sure you check that Wizard Wednesdays episode out, because I called the reversal from $140. And seeing that movement there, the first thing I said that would come through was $100, $80, $70, and then last but not least, around $60, which actually right now is looking much closer than I actually anticipated. First thing that I notice here as well, nice little trend line in play. If I extend this out a little further, we'll get to that in a second. But extending that out to there from body to body, it's already met. But I would prefer to use a wick to wick method for this scenario. You can see a very small head and shoulders forming here, shoulders, head, shoulder, which has pushed us lower. And after seeing that reversal, if I just quickly mark up some key levels of where we are right now, we are actually floating around another crucial region of support right now. As you can see, broke through here before, tested, and all of this candle price action here really gives me a clear picture of what's actually going on behind the scenes. Using this level in confidence of what could be going on, and considering we could be seeing further upside movement on LTC, let's start plotting where these movements could occur. Before we do the fibs, let's actually just get these clones up. Drag this straight up to there to around $90. And again, this does also move in increments of around 10. So 10 very thin level, literally like that. And all I would do, simply change the color of this just to signify it's an intraday level. And all you can see is we've broken through, we've tapped, and we could potentially be touching this trend line. The only thing I'm really waiting for with LTC, and why I'm a bit more hesitant, is because of that exact movement there. Now, if you've noticed, it's actually dipped a bit lower than the initial entry price. So the wick fishing could already be completed, but using this alarming sign in comparison to BTC, which is actually not 1 minute, let's never ever use that 1 minute chart. As you can see right now, this could actually be falling straight to our trend line as well for a double confluence and a perfect execution of what's to come. So using this in consideration, price never actually broke back below the initial reversal zone, hasn't done it for ether or XRP, but LTC has breached lower. So I would just be cautious of this trend line, guys, for any form of drastic wick fishing, and huge and high profitable entries could occur from here. The next thing to really mention and understand what could be going on next is the overall swing movement of this pair. We of course have this currently in play. If we do reverse from this region, nice correlation with $100 up to around $92, nice upside movement. But if we are yet again taking this into consideration first, look at that perfection on the $60 region, something I've covered for so long now. The Fibonacci's are telling us a very strong picture. So overall, we are anticipating a nice long opportunity before these can unfold. And from a short-term perspective, you have some nice profit-taking zones up here. But on a weekly perspective, which is pretty much my main focus right now, to be honest with you, if we do manage to see that little push lower, and if we do begin seeing this market actually tumble, then we can anticipate LTC to start coming up to 1,180 $18, sorry, don't know what happened there, and $130 on a little bit more of an upside push. You can see some precision on those wicks over there as well, just to confirm this Fibonacci level. And the downside levels for me, well, that is where things get very interesting, because as we have an inverse head and shoulders on BTC, we also have the same on LTC. Shoulders, head, shoulders. And I do believe that final push should be the $50 region. So once we see any upside movement, which would again trap all of those buyers into believing it's an all-time high breach, I believe this would then shift the market into the final push down. Looking at where this really correlates as well overall, if you look at all of this, if I extend this trend line out here, this is where things get interesting yet again as well, because looking at where all of this starts lining up and looking at how any of this could drastically fall, even if you were to see this come through in a worst case scenario, if you were to drag this up here, you can see by the end of the year, if we were to drop and break through, this would all be occurring before 2020 actually happens. So using that as a nice guideline as well, I'm starting to see a very clear picture of what could be unfolding in the market right now. If we drop down to the 30-minute chart, easy tap of this level, I believe, quick breakthrough to the upside, pull back, and then from there we start anticipating what happens next. Now guys, I hope this has provided a much clearer insight and a more refreshing perspective and update to what's actually going on in the market right now. From what we've covered in the last episode, and from what we've been covering over the last few weeks, the consistency and the call rate has been almost perfect for the majority of these setups. Even if we've missed a few intraday setups, the overall long-term bias has come through, and it's been absolutely shocking for many. There are still many people who are screaming bull run, but yet these are the same people screaming bull run up here, and now prices down here. Many of these people are left speechless, and all they can do is remain hopeful that an upside push will come. But I do believe even during the next upside push, looking at this price action, we are gearing up for what could be that final move we've all been expecting for so long. So again, if we break through this trend line, retest, we can shift bias and we can hold those long positions even further, and then we're really looking at some crazy gains to come. But it's always good to stay aware of these possibilities and take into consideration that anything can drastically happen at any time. And the fact no one preempted any of this happening, and the fact the Wizards did, just shows us we are far ahead of the majority. Now guys, I hope you've enjoyed this, and more importantly, I hope you are starting to see what's really unfolding behind the scenes and what has actually been going on with the Wizard platform for so long. Spent 7 months hyping it up. We've had the Justin Sun comparisons and all of this stuff as well, and it's been absolutely hilarious because what's been going on behind the scenes is a platform that we've been hiding for so long, perfecting, fulfilling all of your needs and all of your requests. The amount of times we thought we finished, then you guys have suggested something else on Twitter or on Instagram, or you've DM'd me another suggestion. So we've got to work straight ahead. We've got over 16 people working internationally on this project to finalize this and get this out very soon. And it's much closer than you think. Best believe over the next few days and weeks, we'll be throwing in so many more leaks and reveals. And all I can ask is please leave a comment in the YouTube comments section and just let me know if there's anything you want next. Let me know what you think of the platform so far from what you've seen, and let me know what we can actually do to perfect this even further. All I know is you're going to be in for a massive treat when I do truly believe this will revolutionize the crypto space and of course the educational space. The content alone for education, I've never seen strategies like it before, and I've told you this since day one. And now my goal is to make sure the platform alongside the team, we are ensuring that nothing like this will ever be achieved besides the Wizard platform. Now guys, I'll be seeing you in Telegram, Twitter and Instagram very soon. Hope you've had a good night, and once again, massive apologies for the delay. Hopefully we get some nice profitable trades to follow through from these setups.